Cypress Financial Group presents the Retirement Roundtable podcast with John Scallan. Get more at cypressfinancial.net. Now, let's get to the show.
Last weekend, John, wanted to take a couple seconds and reference a great call we got from one of our radio listeners, and she was a widow, and she just made the comment that I just need a little help. You know, we talk about family every week here on the Retirement Roundtable, serving the families we serve. And she made the comment, well, you know, I'm widowed. I don't have any kids. You know, I don't have family close. I need a little bit of help. But I think it's worth mentioning that there are strategies, John, and you work with the great divorcees, with the widows every single day at Cypress Financial.
Yeah, Mark, this was a lovely person. I mean, calm, genteel, really needed help. I mean, she hasn't been able to accumulate a lot, but in her case, you know, she had 2 sets of guaranteed income, about double of what she really needed to pay her bills. So, you know, her plan was not we didn't have to do a lot of heavy lifting, but we were able to help her set up strategies to start pushing some money aside, taking some of that excess and make sure she's moving it, you know, not spending it, but moving it from one pocket to the other. So in her case, we were just thrilled to meet her, thrilled to talk to her, thrilled to really help her sleep a little better at night. And in her case, let's beef up that emergency fund, you know, to really make sure she's got something to fall back on in these next, you know, hopefully 3 decades of her life.
Well, you said it right there, strategies. Strategies to help you navigate to and through retirement. Or if you're happily married, unfortunately widowed, gray divorced, whatever your situation is, everybody's plan is different, and John has worked with all of them. 504-732-1001. Nothing wrong with asking even what you may feel like is the most simplistic question about your financial future. 504-732-1001. And you just said it, because here's something that always puzzled me, John. Somebody we worked for 30, maybe 40 years, and during that time, we're being told that we are now a long-term investor. Don't panic. Stay the course. Think decades, not days. Then, John, then we retire. And now we might be living, as you just said, another 30 plus years in retirement. But suddenly the advice turns into something a little bit different. People are talking about being conservative, protecting what you got, playing defense. Why does investing philosophy have to change just because you stopped getting a paycheck?
Mark, this is such a great question. I'm glad you brought it up. And honestly, it's one that we get asked all the time. The short answer, your relationship with money, it changes the day that you retire. And when that relationship changes, your strategy has to change with it. Let me explain. When you're working, you're adding money every couple of weeks. The market drops 20%. You don't love it, but in some ways, it's actually good news for you. You're buying equities, buying shares on sale. Your paycheck keeps coming in, your dollar cost averaging all the way through this market volatility. Time is on your side. You've got 10, 20 years before you need that money. So yes, you are a long-term investor. But Mark, here's the thing. The day you retire, everything flips. Now you're taking money out. You are not buying shares anymore. You're actually selling them. And if the market drops 20% right after you retire and you're pulling $4,000 a month to live on, guess what? You're forced to sell these shares at depressed prices. You're actually locking in losses just to pay your bills. And Mark, that's not investing anymore. That's hoping the market cooperates with your electric bill. And again, I'll say this again, hope is not a strategy.
You need to have that in neon right above the front door. Welcome to Cypress Financial.
Or a t-shirt, right?
Hope is not a strategy. So the timeline, John, might still be long, 30 years in retirement, but the mechanics are completely different is what you're saying.
Yeah, spot on, sir. And this is where people, you know, they get blindsided. I mean, picture this. There's a couple from the North Shore, hypothetically mid-60s. They've saved about $900,000. And hey, they have been great savers. They maxed out their 401k for decades, and their whole portfolio, it was still invested like they're 35 years old. Aggressive growth funds, tech heavy, minimal bonds. Here's the question that we ask. When was the last time you adjusted this portfolio? They said, well, our guy told us 30 years ago, stay aggressive for the long haul, and we just left it alone. Mark, that advice was great when they were 35 years old, but now they're retired, pulling out $3,500 a month, and it's 100% exposed to market. If we hit another 2008 style crash in year 2 or 3 of their retirement, Mark, the reality is they might not recover. They may run out of money in their late 70s. I mean, game over as far as their income plan.
We're painting a picture of a couple going through this situation. So in this hypothetical situation, how do you help? What can we do to preserve our assets?
Listen, they've got a lot of money. We restructure the entire strategy. In this case, we take, $200,000 to $250,000, actually enough to cover 5 years of income. Then we reposition it in a contract with a guaranteed lifetime income rider. The money comes in every month. It's got 100% downside protection, and they get a guaranteed income stream that starts the day that they need it. Mark, no matter what happens in the market, the income check, it shows up every month. It's contractual and it is locked in. Now, if the market crashes tomorrow, they're fine because we've positioned this lifetime income to where they don't have to touch the growth portion of their portfolio. They don't have to sell at a loss, and they can recover when the market recovers. Mark, the rest of the money, we kept it invested for growth with active management. I want to say this again, active management, rotating into strong sectors of the market when the opportunities look good, moving to safety when they don't. Mark, that's not hoping the market behaves. That's how we at Cypress Financial manage risk.
It's one of the key pillars that the team at Cypress Financial work on every single day, always thinking about taxes, income, and risk. So, John, you're still thinking long-term, but you're acknowledging that they have short-term needs as well.
Yeah, that's really the shift that we have to get our clients to think about and in many cases move to. Listen, we are not about abandoning this long-term thinking and long-term strategy. We are simply helping our clients recognize that in retirement, you're actually managing two timelines simultaneously. You've got the money you need soon. That has to be guaranteed and protected. And then you've got the money you won't touch for 10, 15, 20 years that can still grow. Mark, the mistake that some people make is treating all of their money exactly the same. They either stay 100% invested in the market and hope and pray that they don't retire into a big crash, or they go 100% conservative investing. And you don't want inflation to destroy their purchasing power. In these examples, both extremes really don't work.
I want to talk to the adults who are listening to the Retirement Roundtable right now, and they're hearing what you say, John, and maybe they're kind of thinking to themselves, I'm really not sure if my portfolio matches my new reality. What's the first step that they should take?
Mark, always pick up the phone. That's the easiest way to get to us, 504-732-1001. You can reach us at cypressfinancial.net. Many clients go online and book an appointment right from the website. Let's look at how your money is currently invested. Are you still positioned like you're accumulating, or have you made the shift to address what your distribution of these assets look like? Do you have guaranteed income in place to supplement your Social Security to cover your essential expenses, or is everything exposed to market risk? Remember, for all of our listeners, these initial meetings are always complimentary. We'll walk you through your portfolio, your income plan, and help you figure out if your strategy still makes sense for where you are today. Listen, staying aggressive in retirement, sometimes it isn't being brave, it's simply being too risky.
That number again is 504-732-1001. We have a representative standing by right now and throughout the weekend to talk to you. A couple of quick pieces of information, a name, a phone number. What are you worried about in retirement? How can John help you? But the most important question I'll ask you is, when is it convenient for you to sit down with John and the team at Cypress Financial at one of their multiple locations across southern Louisiana? Again, that number is 504-732-1001. And John, you can meet us across the Gulf Coast, but where are the two main offices of Cypress Financial?
Right in the heart of Metairie, 3421 North Causeway Boulevard, almost across the street from the famous Lakeside Mall. On the North Shore, in the Brownstone Office Complex in Mandeville, Florida Street. We'd love to see you at either office. We can do a Zoom call, a Teams call. We can always just talk by phone to help us get started in helping you figure out these intricacies and how to turn the dial to help you and your family in retirement.
And again, he serves up and down and throughout the Gulf Coast as well. So John can meet you at a time and a place or via Zoom, whatever's easier for you. Again, that number, 504-732-1001, cypressfinancial.net. And John, the noise, the headline's been heavy for the past couple of weeks. Geopolitical tensions overseas are raising economic concerns here at home. I want you to hear this clip from JP Morgan Chase, his CEO, Jamie Dimon, who recently told CNBC that he's keeping a close eye on inflation.
I think there's some risk, more inflation than people think, and that could be like a skunk in a party if that ever happens. Hopefully it doesn't happen, and no one actually knows. But this right now will increase gas prices a little bit. And again, if it's not prolonged, there's not going to be a major inflationary hit. Again, if it went on for a long time, that would be different.
I hope the gas prices aren't hit for long. I've already gone up about $1 so far. Let's just see what happens. Jamie,
I think that could be the skunk at the party,
exactly.
Mark, as Jamie Dimon says.
Exactly what he said. So when you're designing a retirement plan, do you actually build in room for these kind of surprise shocks when it comes to geopolitical issues, how it affects us at home, like we're seeing with gas prices, what could happen next? Do you plan for these?
Oh, absolutely, Mark. Listen, the world is getting smaller. It used to be when I first came into the business, what happened in the U.S. was a bit insulated from the rest of the world. I mean, Mark, the reason is simple. We plan for what's possible, not just for what is probable. Could there be a geopolitical event that spikes oil prices? Hello, right here it is. Could inflation come roaring back? Could the market drop by 30% next year? Listen, yes, and yes. We don't know when. We don't know how severe, but we know that these things happen. So when you're building a retirement plan, we don't assume, listen, everything is smooth sailing. We stress test it. What if the market drops 30% in year 2 of your retirement? What if you need to pull an extra $50,000 out for a family or a medical emergency? If the plan breaks under these scenarios, it's not a plan. It's actually just a wish that everything is going to work out.
So when you put these plans together, we're not talking like just straight geopolitical issues. You're running a worst case scenario, a what if scenario for adults, even before they retire, to see if your plan holds up. That's what stress testing is. Is that safe to say?
Mark, that is spot on. I mean, remember, year in and year out, AARP does the study. What is the biggest concern that people have moving into retirement? Mark, you know this. We say it every couple of weeks.
Yep.
It's running out of money. So what we want to do, we want to lock down your income. We want to make sure that no matter what is happening on the geopolitical stage or in inflation or in the Middle East, that when you put your head on your pillow at night, you know beyond a shadow of a doubt, I've got enough income to take care of my needs. I've got a significant emergency fund that I can move to instead of selling my equities at a discount. I mean, Mark, here's a quick hypothetical.
Okay.
Let's say there's a couple from Tangipahoa Parish, both 62, planning to retire in a couple years. They've saved, just north of $1 million, 1.1 million. They really felt confident, but when we ran the stress tests, we found a crack in the foundation. If they retired on schedule and we hit a prolonged period of higher inflation, let's just call it 4 to 5%, and this went on for 5 or 6 years, their plans started cracking around year 15. Now listen, they weren't broke yet, but they were getting dangerously close. And by their early 80s, they'd have run through most of their savings. Again, Mark, that's not a retirement. That's a countdown clock.
So just out of curiosity, in a situation like this, how would you adjust?
Couple of changes. First, we delayed their retirement by 1 year. Now, keep in mind, we didn't tell them to continue working, but laying out the numbers, they looked at each other and said, maybe we work just a little bit longer. We both enjoy working. I mean, that extra year gave their portfolio a little bit more time to grow. They added another year of 401k and pension contributions, and it shaved off 1 year from the withdrawal phase. Small adjustment, big impact. Here's what we did. Secondly, we repositioned part of their portfolio to fight inflation without retiring entirely on stock market performance. We moved about $300,000 into a multi-year guaranteed rate contract. This particular contract locked in 5.7% for the next 10 years. Now, Mark, this is guaranteed growth, tax deferred, zero market risk. Now, if inflation runs hot and the market gets choppy, that $300,000 is still earning a solid return, guaranteed by some of the biggest financial institutions in the world, not what's happening on Wall Street.
Yeah.
And again, because it's guaranteed, they're not stressed out about volatility. They know that piece of their investments are safe and it's growing by a guaranteed compounded rate.
So if I had to sum that up, what you're doing for these families in situations like this, John, you and the team at Cypress Financial, let me give that number, 504-732-1001, 504-732-1001, cypressfinancial.net. You're building in a buffer against inflation without exposing adults to market swings.
Spot on, Mark, spot on. And, for the growth portion of their portfolio, the money they won't need for 10 or 15 years, we're using actively managed models. Again, these rotate into some of the best sectors based on market signals. When things look good, we are fully invested. When signals turn negative, now we move to cash. We're not riding crashes down, hoping for a recovery. We are managing risk actively. So now, when we reran the stress test with sustained 5% inflation, the plan held up. The guaranteed contracts are still outpacing inflation. The actively managed portion is avoiding major market drawdowns. They're not getting wealthier in that scenario, but Mark, here's the thing. They're not running out of money, and that's the entire point.
Yeah, because at some point, losing money hurts more than making money helps. Is that fair to say?
Right. Yeah, again, spot on. I mean, here's what I tell people, Mark. The biggest mistake that retirement savers make when geopolitical headlines heat up is they panic.
Yep.
They see tensions in the Middle East or trade wars with China or Liberation Day or whatever the crisis of the week is, and they think, I need to do something. I need to move everything to cash right now. But usually the damage is already done by the time the headline hits and the market's moved. And then they're sitting in cash, missing the recovery, second guessing if it's the time to get back in. They've turned a temporary problem into a permanent loss. So here's the better approach. It's to build resilience into the plan from the very beginning. Let's make sure you have guaranteed income. Let's make sure you have guaranteed growth contracts that fight inflation. Let's make sure that your equities are actively managed in positions that avoid major crashes. That way, when the shocks come, and Mark, it will come, you're not scrambling, you're ready.
The headlines are very heavy right now, and especially in this world where everybody needs every view, every click, every person watching or listening, the noise can be overwhelming. So, John, I want you to talk to that adult who's listening right now. They're worried about this uncertainty. They're worried about inflation, geopolitics, market volatility. They're trying not to let it get the best of them, but they do have concerns. How can you help kind of calm some of those fears?
First and foremost, let's stress your retirement plan. 504-732-1001. We will run the scenarios where things don't go perfectly, because hoping everything will be fine is how people really get blindsided. Remember, these initial meetings are complimentary. We'll walk you through your plan, identify the weak spots, and show you how multi-year guaranteed contracts and actively managed financial models can keep you on track even when the markets are scary, even when they feel completely unpredictable. Listen, Jamie Dimon's got it right. Nobody knows what's coming, but you can be ready for it when that time comes.
And what's going to be on our T-shirt? Hope is not a plan.
I'm glad you didn't say it's like a skunk at a party. That might be my favorite quote from Jamie of all time.
It's like a skunk at a party. No bad smells here. Only good things from John Scallan and the team at Cypress Financial.
Investment advisory services offered through Cypress Financial Group, a registered investment advisor firm. Registration is not an endorsement of the firm by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Cypress Financial Group, John Scallan, Louisiana Insurance License Number 1064997. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Cypress Financial Group. Read your contract for restrictions, limitations, or penalties.